Right, good morning everybody. Thank you for dialing in, and welcome also to our two presenters, Matthew Peacock, Executive Chairman of Regenersis, and Jog Dhody, the CFO. Regenersis is never a company that stands still, so in the last month a great deal has been happening. You will have seen the interim results, you will have seen our comments on those results. So today's meeting is focused on the proposed acquisition of Blancco, the Finnish software company.
Good morning. Thank you very much for joining us. I'm pleased to be here with Jog and pleased to be able to present the details of our Blancco acquisition, which is the subject of an EGM today. Hopefully we'll be able to announce that that's all approved and closed. But let me take you through a few of the details. Jog and I will share the presentation. I believe we've got about 20 minutes to present to you, and then, as Andy says, time for some Q&A. Blancco is the global market leader in data erasure, a subject area which has become increasingly important in the minds of consumers, and that has led the focus of the regulator's eye to turn to data erasure. Let's just talk about what we mean by data erasure. At a personal level, I think we all understand that we carry data around on our mobile phones, our laptops, and our PCs. And at the end of the life of those devices, we want to be sure that our data is safe. You can download freeware on the internet today that can wipe your magnetic disk clean and sort out your erasure problem. The issue we're dealing with here is at a corporate level, where the physical ownership of the device or the physical holding of the device is much less tangible than when you're dealing with your personal device. And what we've had is a series of quite significant breaches of proprietary data and personal data in the US and the UK that's led companies like Blancco to grow very quickly over the last few years. In fact, Blancco's grown at about 25% compound annual growth over the last 5 years, and its earnings have grown by about 18%. The business was founded by the current chief executive in Finland in '97. He was a software engineer by background, and about 7 or 8 years ago he met his business partner, a German businessman who has been the part-time chairman, and the combination of the business acumen, I guess, and software skills led Blancco to grow very quickly over the last 8 or 9 years, and to move into a series of new territories, 12 in total, which actually combined with Regenersis' existing geographic footprint would lead us up to a total of 22 countries that we're currently in. The business has 130 employees, of which about half are in R&D, and the client list is about as blue chip as you can get, a series of large multinationals ranging from financial services companies to industrial companies, and many more besides, including retailers. The business, whilst it's progressed well in earnings and revenue terms, is really still quite a small business. And I think that reflects on the issue of data erasure amongst corporates at the moment, where it has not been considered a board level issue. Our belief is that's going to change very dramatically as a result of the recent legislative changes, which I'll talk about in a moment. The company has a return on sales of around 37–38%. Our view is that's clearly handsomely profitable, but it's not as profitable as many software companies can be. Software businesses tend to be highly scalable, and we expect there's more to come margin-wise, not least because Blancco has not been particularly demanding in its pricing over the last few years, and indeed has not actually put its prices up at all in the course of the last 3 or 4 years, which represents something of an opportunity in our view. The data erasure market has been growing. The amount of data that we all save is doubling about every 2 years, which is exacerbating this erasure problem, and has brought, as I mentioned, erasure into the focus of the European regulators, where just in the last month or so, the European Parliament has put legislation on the books, which we expect to be finalised in March of next year, which suddenly gives very significant teeth to the regulators' requirements of the individual's right to be forgotten, and indeed the right for personal data to be properly protected. And as a consequence of that, we think this opportunity is an exciting one. We've agreed to pay 60 million euros for Blancco, which represents approximately 14 times trailing EBIT and approximately 12 times forecast EBIT using the company's own forecast numbers, and having not taken into account some of the synergies we'll talk about a little bit later. The consideration for the purchase is nearly all in cash, and there's no deferred consideration element, which we may talk about a little bit more later. We went through an extensive due diligence process using a US consultancy firm to help us with the due diligence, and I'm pleased to say that the results of that were very encouraging. Most particularly on the technology side, the view was that the company has a very high quality development team. There are a lot of ex-Nokia people in the business as a result of some of the shrinkage in Nokia recently. They're very high quality people, and their development practices are best in class. In fact, Alvarez and Marshall, who we'd used, likened their processes to Microsoft's, who are a client of theirs, and said it's relatively unusual to see this sort of quality of scalable R&D and software development in a company of this size. So that's pretty helpful and gives us a base from which we think we can grow the business well. Just turning to that European legislation for a moment, which we expect to come into play in March. The European Parliament will require that member countries put legislation on their books and start to enforce this new legislation within 2 years. And that legislation is going to require that all companies, however large or small, dealing with individual and personal data, have to have a data protection officer. So there has to be somebody nominated who's in charge of a process which is auditable, recorded and documented to look after consumer data. The interesting thing about it is where currently, if you have a breach of consumer data, you as the corporate can put your head down and hope that things don't go badly. The regulator now is going to require that you identify where there's been a breach and take that to the regulator. The teeth in the regulation is that fines of up to 5% of global turnover for these relatively large corporates are available to the regulator. Our view is that that changes this issue from one which is dealt with in the IT departments, in regional offices and in national businesses, right up to the headquarters, and it takes it into the boardroom of these large global multinationals, because there isn't a responsible business I know where 5% of your turnover can be at risk when it doesn't become an issue for the chief executive, chief financial officer and chief technology officer. The heart of this is really around a documented process and an auditable one, and this is where Blancco has grown its business quite so successfully. We'll talk a little bit about the IP around this technology later, but first and foremost, let's talk about the certification of the erasure process. The thing that has led Blancco to stand out amongst its peers is a very comprehensive certification process, such that each erasure is documented, certified, and you can track who erased, when, what, on what machine, and that's then filed in a certificate that cannot be messed with, it can't be duplicated or fraudulently created, and that goes into the archives of both Blancco and or the corporate, and is a permanent record of what's happened. This is really what sets the Blancco capability apart from the sort of freeware that you and I as an individual might be prepared to use, and is the heart of the institutional building block of their services to large clients. And it's that we think is going to drive a new behaviour pattern amongst corporates. And on that basis, I thought I'd turn over to Jog to talk a little bit about the value proposition and indeed the selling propositions of Blancco.
Thanks, Matthew. So there's sort of three ticks for me that are really important with the Blancco proposition. The first one is a technical one. So Blancco is the only software in the whole world that can guarantee that it can do all the different device types, whether we're talking servers, laptops, desktops, mobiles, smartphones and tablets. And that's pretty important. If you're the corporate, if you're the CIO of Vodafone, you don't really want to have different solutions for doing your different device types. You want a one-stop solution. You want it to cover all the different OEM types, and Blancco can do that. That's the first tick. The second key area of technical expertise that Blancco has is it can guarantee that it can do solid-state memory, and it's possibly just worth touching on that for a moment. In your laptop or your PC on your desk, you've probably got a magnetic hard disk, and that's actually quite easy to erase. Whereas the new technology in your smartphone or in your iPad is solid-state memory, and that's harder to erase. It's harder because it's encrypted. It's got no moving parts in it. Blancco is the only software that can guarantee that it can do solid-state memory, and we've had Alvarez and Marshall do the technical due diligence and confirm that this is the case. In fact, they've been able to deliver this through their R&D, and Matthew's talked about they've got 50 or 60 R&D guys, and this is something that is patentable, that they haven't patented it yet, and we will do that. So the first tick is technical. The second tick is commercial. So from my point of view, if I'm responsible for a risk manager in an organization, you want to make sure that you've got the certification, and Blancco can do that. The second thing that they have is something called the management console, which sits at the center of the environment for when you roll out this software. And you can sit with this software at the center as the CIO and force the distribution of the Blancco software through your entire network, through your servers, through your laptops, etc. And this management console tracks and keeps an evidence that the software has been deployed. The management console also keeps a track of which devices have been erased and keeps these audit certificates that Matthew's talked about. And that's the second tick. And the third tick is emotional. If your butt's on the line and you've got huge fines, is a possibility if you get this wrong, you want to pick the best software in the market, and Blancco is absolutely the best software in the market. And how do we know it's the best software? If you turn the page to page 6, we've mapped out here the kind of the competitors of Blancco in the market. On the left-hand side is the chart of the revenue for Blancco, and the code name for this project was Berry. So Blancco, you can see very much the biggest player in the market in terms of revenue, and there's 3 of the competitors. Competitor A is actually the Kroll business, and it's the forensics business. They did have their own erasure software, but literally within the last month or so, they've decided that they don't want to use their own erasure software, and they're going to move over to Blancco's because their software can't do the new solid-state technology, which is the way most memory and storage is moving towards. And competitor B and C are much smaller, privately owned businesses, primarily based in Israel, and you can see that they are much smaller. On the right-hand side are a bunch of certifications. Now, these are awarded by national bodies that have an interest in data erasure and data protection. And Blancco, you can see from this illustrative chart, has many more certifications than any of the competitors. If I'm the CIO of a corporate, you're going to want to buy the software which has got the most certifications on the outside of the box. If we turn to page 7, if we talk about this deal, so Matthew's talked about the pricing is 60 million euros, which represents 14 times trailing EBIT and 12 times forecast EBIT. And there's a bunch of synergies here that we haven't priced in our mind, and these are upside for us as well. So the first one is this Kroll one, which we've not put on the schedule because it's very much hot off the press. So this Kroll deal, where they're going to stop selling their own software and start selling Blancco's on a 50-50 revenue share, is new for us, and we weren't expecting it. It's good news, and we need to quantify how much that is of a benefit to us. And then there's a bunch of other synergies. The bottom one Matthew's talked about, this is a pricing opportunity. The organization is a great organization. Blancco's got some very smart engineers, etc., but they're not necessarily have been commercial as we'd have expected. So examples such as the product pricing not having been increased for the last 3 or 4 years is a particular opportunity that we want to relook at the pricing of the software. There's 2 or 3 other opportunities. The middle 2 are around how the product is sold. So at the moment, Blancco has about 40 salespeople around the globe, and they very much sell the product bottom up. And this is where they will talk to the corporate in the country, and we think that approach could be enhanced by selling top down. This issue of data erasure, because of the new European legislation, is now going to be a CIO, a CEO issue. We've got the relationships with the major operators, the Vodafones and Telefonicas of this world, and with the major OEMs, and we think we can use our global customer relationships that we've got and sell this product in on a top-down basis. We think we'll get a better outcome from that. And then the other opportunity is this first one we've listed on here. There's actually a sort of consumer version of the Blancco software which you can download for free. You can have a look at it on their website, www.dban.org. And you can have a look at that. And at the moment, Blancco gets 100,000 downloads of that software for free every single month. And at the moment, that's not commercialized in any way. And we think there's a way of commercializing and generating some revenue and profit from that free software at the moment. So there's a bunch of synergies here that we need to go away and work out how we deliver them and what they're worth. Matthew's talked about the acquisition. Most of the payment is in cash. We will look to lock in the CEO by paying him some of his consideration in shares, and there's a few other vendors that are employee vendors that we'll look to keep in the business. And in terms of funding this deal, this slide says we went out originally to raise 75 million. We had very good demand from the investors that we saw, and we ended up raising 100 million, subject to EGM approval today, which we should get to 11 o'clock. We will issue those shares today, and we'll look to complete the Blancco deal tomorrow. And that's the summary. Thank you.
Right, thank you, Caitlin. Reminder, please send your questions in. We have quite a few already. A number relating to your due diligence on the deal. One from Ashraf. In terms of your comments about selling top-down, obviously without having disclosed names, but have you spoken to CEOs, CIOs of leading operators or OEMs about the risk that this legislation might imply?
We've certainly talked at a senior executive board level in a couple of the network mobile operators about this kind of issue over the last 4 weeks. It's very interesting. I would say there is largely a complete lack of awareness at a senior management level of what is coming legislatively. These are, of course, very large organizations by and large. The interesting thing is that most of the mobile operators have been involved in lobbying very heavily against this legislation, but knowledge of it doesn't seem to have filtered through to central thinking yet. So the answer is yes, we have talked to them, not extensively. Clearly the deal has been highly confidential, but we've talked enough to get a sense that this is new news to people, and I think that our view would be corporates are going to have to move very quickly in order to meet these regulatory requirements.
Okay, a related question from John. European legislation and the threat of substantial fines. He said, well, we have heard this before in many other industries. How confident can you be that there will be real teeth displayed by the regulator, or will it just be saber rattling?
It's a good question. First of all, let's deal with the legislation itself. That seems to be into a rubber stamping process now. In March there was a vote of the MEPs, which I believe went 260 in favour, 10 against. The lobbying against this legislation has been considerable because of the teeth in the penalties, and it seems to have got through to this stage. There is one last stage to go through in the European legislature, which is the vote of the Council, which I think is broadly considered to be a rubber stamping process. Is very unlikely to change any of the proposed wording that we've talked about in any substance, and then this would go live in March. I think the question is really will the regulator actually do anything about it? And I think the interesting thing here is that you're in the mainstream of public opinion, and perhaps a useful example is in the US, where there is not overarching legislation like that proposed in Europe, but where the US has relied somewhat on class actions to move corporate opinion. I was in the US at Christmas time, and Target, which is one of the big US retailers, had a very considerable issue where I think it was 27,000 odd individuals' consumer credit card details were lost. That resulted in three things: one, an immediate dismissal of Beth Jacobs, who was the CIO. Two, the regulator fined, in that case, 1.1 billion to Target, which is a substantial number, and they're now fighting a class action, which I believe is of a value of about 2.2 billion. So consumer opinion has been such that the regulators elsewhere have certainly had to act, and there is enough credit card fraud, identity fraud, etc., that we expect there to be pressure, and there has certainly been the pressure to fight off significant lobbying and to get this legislation onto statute books. So I can't predict what the regulator will do, but the mechanics are all there, and they're certainly frightening enough numbers that it will get attention at the senior corporate level.
Okay, we have a couple of questions about R&D at Blancco. Simon would like to clarify that the historic investment has been of the order of about £1 million.
Yeah, it was 1.4 million last year.
And are you planning to increase that or keep it broadly similar, or a case of seeing how the integration proceeds?
I have no view at the moment about whether we would increase or decrease it. Very much we would look to assess that over the next few months as part of our integration review. This business has moved forward over the last 17 years by investing the substantial part of its profits back into R&D, and it's been very successful doing that. I'm not going to break something that isn't, that's working fine at the moment, but it's up for discussion.
I think it's worth saying that the level of R&D expenditure by Blancco is, to the extent that we can see, larger than the profits of most of its competitors, and that's creating some blue water or clear water between it and its competitors, and it's because of that R&D spend that they have this solid state capability which sets them apart technically at the moment, and at a point where the market is changing, we think that's a very valuable advantage to have and probably to press home.
And leading on from that, Ilian would just like to know if you can actually talk or illustrate any new products that are coming out of this exciting R&D pipeline in the near future.
I can't be specific for obvious reasons. The focus is very much on keeping up with the new hardware devices that are coming out. There's new hardware devices being released by OEMs all the time, and that's one of their key focuses. The general shift of solid state technology, they've got it. They know how to do this solid state technology erasure for mobiles and tablets. Very much solid state is now going into server farms as well, and they need to focus on the product, on tweaking the product for that. And very much Blancco's business has historically been focused more on the laptop and server market, whereas Regenersis business is more focused on the mobile market. No doubt we will look to put those two things together and tweak the offering accordingly.
I think it's probably worth saying, Jog, that the thing that we believe Regenersis brings to the party particularly is the commercialization of this. The R&D and development has been as good as you could expect it to be, and possibly better. And the product suite is there to support a much, much larger business. The question is, can we stimulate the market? Is this regulation going to stimulate the market, and have our credentials in serving some large global clients given us the footprint and indeed the backdrop to sell this in from a top-down basis? Our view is clearly that those things are all favourably placed, and we've got the wherewithal to commercialise what's a very, very strong technology suite.
Yeah, and then again, following on from that, Simon, would just like to clarify, you mentioned 22 countries now in the matrix, and he's just intrigued about the cross-selling potential with mobile phone re-commerce, or whether this would be a standalone business that would benefit from your commercial nous.
I think we're going to have to think quite carefully about whether we keep drawing this matrix. It's going to get quite complicated. Jog, do you want to answer that?
So in terms of the cross-selling, one of the opportunities that we will look at, we talked about this DBAN website, and if you think as a consumer you're looking to replace your device and you've replaced it and you're now erasing your old device, hence you're downloading this DBAN software, at that point you're pretty warm to an opportunity to, if we could bolt on a re-commerce opportunity at that point and say, well, what actually are you going to do with the old device? If you're just going to leave it in the attic, could we buy it back off you? Could we add some value to it and resell it into a secondary market? And that's one example of a cross-sell that we're thinking through how we can commercialize that and do that quite quickly. We've got 23 people in our global sales force with relationships with all the major OEMs and operators. These guys are now all briefed on the Blancco deal, and they're now out talking to our customers about the Blancco proposition.
Here are a couple of questions on the balance sheet, Jog. Firstly, on the acquisition cost, Paul is delighted to see you using EBIT as the relevant software multiples. But he'd like to know how much of the cost might be capitalized into intangibles. And following on from that, or indeed sort of looking backwards, some of the placing is going to strengthen the balance sheet in terms of your historic business. How much do you see it as being a case of more Regenersis capital being needed to initiate some of the larger contracts that you are now winning?
Okay, so you're moving away from asking purely about Blancco, but let's answer this first question. So there will be an intangible on the balance sheet, and we will assess that as part of our fair value and goodwill review. I don't know the value of it yet. I suspect it'll be somewhere between 0 and 60 million. Clearly, we'll assess that between now and our year end and publishing of the accounts in September. In terms of the Regenersis Group's balance sheet, the 100 million funding that we'll raise, half of that will go to pay for Blancco. The balance will be used to completely pay down the group's debt, and it will leave us extra funds of the order of sort of 20 million, which we will keep. So that gives us lots of firepower with the 20 million extra funding, plus our revolver facility, which is 30 million, nearly 50 million of funding potential to go out and do further growth. That growth can come through M&A, and we have 3 full-time in-house M&A guys, and they're out looking at businesses, different parts of the world, for the depot side and also on the advanced solution side, to invest that money. And then organically, some of the new contracts that we're winning, they're larger in terms of the absolute scale of them, particularly the advanced solutions part of the business, the e-commerce offering is slightly more working capital intensive, and we will look to invest some of the extra funds that we've raised into working capital to fund the growth of the Regenersis business. And just to remind you, when we've been doing M&A deals, we've always done deals that are accretive. So any deals that we look to do, you'll see enhanced shareholder value from that. When we're investing back in working capital in the business, whether it's new depot contracts or new re-commerce contracts, our return on capital employed is of the order of 70 to 80%. So that's also very accretive as well. So we'll put these funds to good use over the next 12 months.
Thank you. And in terms of future deals, David was also curious. You have built an internal infrastructure for execution. What might you foresee as the integration timescale for Blancco, and would that affect the pace of future non-organic deals this year?
Perhaps I can take that one. Well, I think the first thing we should say is that the first level of integration has got to be a Salesforce one, and that is already happening. They're relatively small numbers of people. It's not a complicated proposition, and as Jog mentions, we've got people on the road already working at that cross-selling. The more complex part of it is some of the productization, where you're mixing what we've got in Blancco in with some of our e-commerce propositions, some of the insurance propositions, and even there are interesting opportunities around the diagnostic side, particularly on the mobile side, which we can imagine. I think our inclination is to go slow on that and try to exploit the low-hanging fruit around cost and sales synergies before we add complexities to the mix. We would see that integration process as a lot less intensive than the operational integration of a sizable depot acquisition. So I think whilst we need to take the obvious opportunity to digest this, there's a reasonably sizable senior management team now, and there are other parts of the business that have got bandwidth and capacity. So our focus has moved a little bit. I think you'll see, as we develop the M&A pipeline over the next few months, you should see some more advanced solutions type activities. These acquisitions are not easy to find, as you might imagine. I think you'll see probably less geographic expansion on the plain vanilla depot side of the business, but we've got capacity in the B2B side of the business, which has been growing very well as well, and where we, as you know, we've got some exciting developments in the US with our facility in Memphis is opening, and so I think you'll see some more around that as well.
Right, well, we just might try and fit in two last questions. There is a general meeting to come. John would just like to know, is there an inherent disparity between you saying that Blancco is clearly the best of class at what they do, but they have not raised their prices for products over the last 4 years, or has that been part of their strategy in terms of actually building a core position with clients from which in the future they're very unlikely to be moved?
I don't think it's. I don't honestly think it's been a clever pricing strategy. I think you've got a company which is very R&D and technology focused, and when we talk about best in class, I think our measurements or KPIs for that is the biggest, it's the most profitable, it's the largest geographic range, it's the most comprehensive solution technically, both between device across the range of devices and across the range of technologies, and it has the most comprehensive suite of certifications and mechanism for auditing and erasure reports. On all of those counts, it is by far and away the market leader. I don't think it also means that it's the best run business commercially, but we hope we can bring that to the party and certainly would expect to.
Right. And then a last one from Nick. You appear to be predicating the success of this deal on an anticipated change of behaviour in the corporate sector, which is always hard to predict, but the rationale seems convincing. What other major risks did you assess and feel comfortable in moving forward on before the transaction?
Well, let me perhaps deal with the first element of that, and I'll let John talk about risk. I think that's partially correct, and certainly the knock the ball out of the park scenario requires and is predicated upon some change in behaviour, which we think the catalysts are there for, and we've talked about them. But there's absolutely no reason in our minds, with the moves in the market from consumer reactions, etc., that this business isn't going to keep growing at sort of 25% per annum. And we've also talked about some of the synergies, pricing, etc., that should suggest the margin will be enhanced as that growth continues. And I don't think it takes much of a bit of maths to roll that 25% growth out over the next few years and tweak the margin to work out if all we did was put it on a standalone basis and get some of the basic synergies that we've talked about out of it. It looks a very compelling deal, and it's also a very, very robust profit stream. It's worth mentioning that those profits are comprised of about 400 companies, of which none of them are more than 1% of revenues, I believe. And so you've got a very diverse set of clients and revenue streams coming in there, and the repeat purchases are running at about 99.6%. So things starts to look like an annuity, and certainly an annuity growing at the rates that I've been indicating is very valuable. So I think the knock the ball out of the park scenario does require a change, but I think it's a good deal standalone. Risks, Jog.
So we've done a very thorough due diligence from a finance, legal, tax, IP, and software point of view. The business is very simple. The revenue model simple, and the balance sheets are very simple. So the financial, tax, and legal due diligence didn't really throw up any issues at all. On the IP side, we've done a very thorough search on patents, and there was no issues there. As I said, the key recommendation was around filing some patents as part of the protection of the solid state data erasure technology. And the key area of risk that we looked at is the software, and is it robust? Can it do all the different device types? Is it scalable? And we didn't do that ourselves. We used a third-party consultancy, Alvarez & Marshall, that are experts on this, and their report came out very, very good indeed, much better than any of our sort of wildest expectations. So they're the sort of key risks that we consider as a part of the deal. The other key risk that we really looked at is the sort of management team. Clearly, the founder and the chairman, they're going to make a reasonable amount of money from this deal, and we don't necessarily expect them to stay with us forever. But we've looked at the next level down, and what the business has been doing, have done a very good job on, is recruiting a great management team underneath them. So we've met and got comfortable that there's a really great R&D team led by a head of R&D, a really great sales team led by a head of sales, and we've checked all those sort of management team out, and we're very comfortable with them, that they're good people that we can work with and help grow and support, and they're the risks that we really thought about.
Great. Well, thank you very much, gentlemen. Thank you, attendees as well, and good luck with your vote, and good luck with the acquisition and integration as well. Thank you.
Thank you very much for joining us.